We hope you enjoyed your meal, and we are now all set to begin with our next session for the day, which is titled as the need for 360-degree reporting by credit bureaus. Since microfinance credit is given based on declared household income, the risk assessment is based on this figure and loans are given. However, any other loans taken by the family do not reflect on the credit bureau, both from the risk perspective of the MFI and the over-indebtedness aspect of the MFI as far as the borrower is concerned. It is imperative that a 360-degree credit history be made available. Today, we only have vertical information which is made available. From a credit risk perspective and client protection perspective, we need 360-degree reporting, gaps, ground realities, cost of downloading reports. Now to deliberate on this session, we have our session moderator, Mr. R. Bhaskar Babu, founder, Suryodaya Small Finance Bank Limited, India, and a distinguished panel comprising of Mr. Colin Raymond, Lead Financial Sector Specialist, Finance and Markets, World Bank Group, Mr. Satish Pillai, Managing Director and CEO, TransUnion, Sibyl, India, Mr. Sundar Arumugam, Head Product Management, Equifax, India, Mr. Darshan Shah, Director, Credit Services, Experian India, Credit Bureau, India, and Mr. Ram Iyer, Director, Risk Advisory, Deloitte Touch Tomatsu, India, LLP. Ladies and gentlemen, if you could please put your hands together as we invite our panelists along with the moderator here on stage. Since we already are aware that we are running a little behind schedule, so we'll request our moderator if we could kindly abide by the time which is there on the screen and try to finish the session along with the Q&A in this time frame. Thank you very much, and of course over to our session panelists to take it forward from here. Thank you.
Thank you. Well, good afternoon. I hope you've had a good lunch. I hope not too good a good lunch where you're going to fall asleep. Well, just briefly, when we talk about 360-degree view of credit reporting, we use other terms such as comprehensive reporting or holistic reporting. This is reporting that takes into account credit data not only from banks but other financial institutions such as microfinance institutions, telcos, trade creditors, retailers, utilities, etc. Maybe one simple way of looking at it, it's credit reporting on all credit, on all borrowers from all lenders. So that captures the whole picture for you. So it's all loans, irregardless whether they're just bank loans, whether they're fixed term or continuing credit, whether they're credit for goods, credit for services. So all of those aspects of credit's included from all borrowers, individuals, firms, joint partnerships, small, large, medium. You're talking about all borrowers, regulated or non-regulated. And so it's important to try and get that picture in mind when we talk about comprehensive or 360-degree reporting. And I'll just touch briefly on the benefits of that, because when we look at studies that have been done in geographies where comprehensive credit reporting systems are in place, that is always associated with a higher ratio of private credit to GDP. And then also where there's an improvement in this credit information sharing, there's always an increase in credit levels over time. So in summary, there are benefits all around for the borrower, because if they can have a full credit history, they can then get and obtain a loan. Lenders, it's a better decisions that are made because you have fuller information for credit risk, credit worthiness. And then also for regulators, they can get a good picture of the market and the trends that are going on. So that's how I would define, I guess, comprehensive or 360-degree view reporting.
Thanks, Bhaskar. So I think just adding on to what Colin said, there's a way to kind of look at this in a broader context, because I love the way Bhaskar spoke about as well. The 360 view can be looked at larger than credit as well. If you start looking at understanding the consumer and whoever's lending, really needs to know obviously their affordability, and not just their affordability, they need to understand their family's affordability. And India is not as nuclear as the rest of the planet, and I think where the vulnerable sections of the society are less nuclear. Therefore, the community matters, therefore, the household matters, kind of in our language. And then, the reason that's important is that leverage by itself is never bad. Leverage in conjunction with affordability actually tells you a much truer story. Because in places like India, where you see debt rising, but is it riding in proportion to the affordability? And that's kind of how you get a sense. When you look at credit as a percentage of GDP, you see that penetration is not that high, even though credit is being given, inflation is high, so on and so forth. But if you take a step back from those kind of theoretical measures of 360-degree view, because we would all love to, and I would tell you that organized lending, unorganized lending, money lenders, everything in the middle would love to know more about their customers when they come in or after they come in. So the question is not about information. The question is actually about the asymmetry that exists, that they know something you don't know. And how do you make sure that you have that? And to that, using the proverbial metaphor of crawl, walk, and run, let's look at the crawl piece first. So saying if you are a microfinance borrower, lender, and you are lending to a group, in that instance, do you know that individual completely, even from a credit perspective, even from only looking at banking? So I won't even go into insurance and telecom and many other obligations that any individual would have. And what clearly we've seen, and again, I think that a lot of us in the business of collating data, we would like to look at ourselves slightly differently in terms of removing asymmetry, not by providing data back to you, but the insights. And we've seen about, we're talking about the recent time, almost if you look at the last year and look at all microfinance borrowers, you see about 7% of them have at least had at least one relationship with banks, right? So about 7% of them. The number actually a year ago was about 10. So even if that number is not that meaningful in terms of migration, that 7% actually tells you a story. Saying 7% of the time when somebody's coming to borrow money, they actually have a past history that you're blind to. So that's important, right? Second piece that's important is there is 93% which is not. So it doesn't matter that you don't need more information. Absolutely you do, because otherwise you wouldn't have the portfolios of risk that you would have, you wouldn't have the challenges in underwriting. And I think what we have to look at in India, the meaning of alternate credit is not just a matter of cell phone data. I think that's important. Social media, which is important. But you start to look in the Indian context, you have to use the benefit of numbers in India. And benefit of numbers, by that I mean that the 93% can better be quantified because no individual in India, just because the law of large numbers is unique. There are similar behaviors exhibited through similar people that you can actually identify to really get a better view of the individual. Then you step into the next function of saying, if they have a telecom bill, can I get access to that information? Do they have any other spend that I can get a sense of, and therefore build some history around it? So to me, there's a dichotomy in the 7 and the 93%. 7% is huge to know. It's interesting that 7% also kind of tells you the banks are making decisions, and when the banks are making decisions, you'll actually see their NPAs on that segment is lower than the 93%. 360-degree view helps. Knowing when to look for it helps. Knowing what to look for it helps. And I think that's the kind of important journey that we have to get on.
Thanks, Satish. Sundar, over to you. If you could also tell us that what is it that isn't available today to get anywhere closer to a 360-degree view, and what is it we need to do more to get that view?
Sure, Bhaskar. Kind of building up on what Satish said, right? So we got the performance of microfinance borrower into the data repositories in the credit bureaus. We have the consumer lending bureaus that are already established for over 10 years. And we have commercial, which is small, medium business exchange that's been running around for the last 5-6 years. But the fact still remains that today almost 35 to 40% of credit applicants are either no hits, meaning they are not found on the credit bureau, or thin file. And in some specific products, it's even higher. What it means is that for these applicants, there is no past behavior of credit that will either not enable them to get access to credit or get credit in different terms than others. 360-degree view can be looked at in two aspects. One is just looking at the credit performance data from all the lending institutions. I think that's fairly solved right now. There are only few institutions which, because of technical reasons and because of other reasons, data is not yet flown to the credit bureau system. But, looking at things beyond just pure credit, right? How do we solve for the 35-40% of guys who don't have a credit file? How do you look at alternate data? How do we look at telecom, utilities, transaction data, the banking transaction data? Last 3-4 years, there has been a huge spike in the bank account, opening of banking accounts through Jan Dhan. how do we use that data to then predict creditworthiness of these borrowers, because as part of the life cycle, these customers are going to move to credit after opening bank accounts in a couple of years. So there is a lot of deliberations happening between the credit information companies and the other stakeholders, including the regulators, to expand the scope of what we can do within the credit information companies framework. And the 360-degree view in that case would be a lot more broader, because end of the day, the objective is how can the decisions be made in a more meaningful way without reducing the information asymmetry, the one that Satish was referring to. That's a broader objective. So what all data can come in is absolutely important that we look at. I think where we are moving is we are moving more towards a heavily data-focused ecosystem. So things like privacy, things like consent, all of that is going to get a lot more important as we move forward. But broadly, from our perspective, looking beyond just what's the traditional formal credit data is what is going to evolve over the next many years to come.
Thanks, Sundar. Over to you, Darshan, in terms of your views on what 360-degree really means.
Thank you, Bhaskar. So 360-degree view from a credit perspective, I'm not sure if everybody was aware, but just to lay the land, there are three major repositories Credit Bureau has. Consumer, which is you and me, individual. There is commercial, which is businesses lending. And there is MFI, which is the third repository. And there are alternate data, which panel speakers they talk about, like utilities, trade credit, and there are a lot of new to credit people into the market as well. So a lot of theme files, which Sundar talked about. 360-degree would be an evolving, in my opinion. Currently, even in the existing schema of things, if somebody is coming to lend to a business, they would like to know how an individual is performing. So in case of MFI, because of a lot of things are happening at the central government, so Mudra loans are coming out there, affordable housing is coming out there. A lot of things, people will start lending into different institutions. So when you're underwriting somebody for an MFI, it's very interesting to know whether they have got any funding or any lending somewhere else as well. According to me, that would be the first step to start with existing repositories and then build on that, on alternate data piece. Currently, our study says almost 14 to 15% of the data, there's a convergence. So if I take the MFI data and run on my consumer bureau, almost 14 to 15%, I'll get a match on that. So that clearly, this will increase once we have this Mudra loans coming into, affordable housing coming into it. So it's very, very critical.
Thanks, Darshan. Ram, I think you have come a 360-degree yourself. Started as a consultant, then turned a banker, now again a consultant. So what in your view is 360-degree of customer?
So, I've been more of a banker than an advisor. So let me talk as a banker, including the last recent 3.5 years building one of the newly licensed banks. One thing when I look at any lending institution, right? So there are three different legs to it. One is from a lending perspective, there are three questions that I have to answer. One is, do I know my customer well? Second is, now that I know my customer well, the products that I'm pitching to this customer, first of all, do I know that product well? And the second thing is, does the customer know the product well and how I know the behavior of it? And the third thing is, how soon in the process, now that, let's say I have given the product, I'm in the relationship, how soon before a customer is heading south can I actually step in and actually make a decision, right? So all these three aspects are very important questions from the first leg. Obviously, as we were doing this, bureau data is extremely important. We actually use that. That becomes one part of the overall, the application scorecard that we would actually build. Eventually, there's obviously the behavior collection scorecard, those things also come. But primarily, the quality of the bureau data is actually very important. It's like, so one thing is, the other aspect is, as a country, it's like the penetration of actually credit, which was rightly put, is, that has to go, that has to increase. So people have to know that, first of all, I can actually take credit. It's like once I take that credit, that information will go to the bureau and everything actually with that. So it's very important to build analytics, and obviously as you go from the commercial aspect all the way to actually the rural and the MFI, analytics plays a large more role in the way you actually deal with this situation. Because as you go down the actually pipe of when you're dealing with masses, you don't have actually enough people to actually cover it, so it's actually usually analytics that actually help you out. So that is the one part of, it's like the asset side of the story. The second and third is actually very critical for our country because, it's also as a financial institution, there is a moral responsibility to actually increase the enrollment that we have of people into actually taking credit, having bureau of information. So if your policies are built such that just if there is a hit, I'll give them lending, it's like then you're actually missing out on a lot more chunk of the population who might be actually very disciplined. But it's just that, the culture of lending has not actually gone in there. So it's very important for the institutions to also build that aspect into their overall business strategy and lending. And the third, but the critical aspect of it is actually literacy. See, one thing in the developed markets, for example, in US, it's like everyone, will have a SSN, will have a score with it. They know that, if you default on it, that default stays with you for 7 years, right? So here, obviously a similar aspect, people have to get educated that now that I have a loan and my information is getting actually reported to the bureau, what are the implications of that? It's like, so that there is a lot more seriousness. So, the third leg I'd put is actually the literacy aspect of it, which has to go along with all the other aspects.
See, I'm told by Sundar and Darshan that the microfinance, there are 3 tracks in consumer bureaus. One is a commercial track, one is a consumer track, and the third one is a microfinance track. When it started 7 years back to develop the Credit Bureau for the microfinance customer, cost happened to be a very critical piece of decisioning. Hence, a separate track was created for microfinance. And there is also an assumption that microfinance customers do not generally have a credit track record. If they have, at best, they will have only microfinance track record. But as Darshan says, there is a 14 to 15% convergence with microfinance customer, and probably if you add the co-borrower or the guarantor, which happens to be the spouse, probably the percentage can jump up to 25, 30 or more. Is it time that we collapse all of that into a single track, or we continue to do it for the sake of commercials or cost, depending on which side you're looking at, but does not enable us in terms of getting a view of the customer at all? Satish, your views on this?
It's a great question, actually. So the way I would answer that question in short way is absolutely. It should be collapsed. So none of you should care that we have 3 or 4 or 19 data repositories, right? At the end of the day, you're consuming information about an individual. So when you pull in information on the individual, what you should get is their entire history. They could be a proprietor and a small business. They could have been a borrower from a JLG, or could be from a bank that it actually took a personal loan. Absolutely, I think that's a bare minimum. To answer your second question in terms of from a financial standpoint, I think the economics of things work itself out. From our perspective, that's the only way to look at it. So we look at migration all the time. The complication where it comes in is, are you able to match because of data quality and all that? But I think we are all at a state right now that we could do that very easily. So the only thing that you consume is, you're not asking for a microfinance report, you're asking for an individual report. So I think that's very clear.
Yeah, no, definitely. This is the best practice when you look at mature bureaus globally. They all have the one repository where all information from all sectors, from all lenders, from all borrowers are in one. So this is not only a benefit of being able to get the one view, but it also increases the actual financial inclusion for the whole country, because you're now having higher coverage rates of the total population. Because even though I might only have one utility bill, Satish might have a phone, but by the time we cover all our borrowers, therefore we've got greater financial inclusion all around. So there are many benefits to be gained from it.
And Bhaskara, I completely agree with Satish and Colin on this. We've come a long way from where we were when we started the bureau, right? When we started, the overlap percentage was like very low single digits. Today, around 10, 12, in many cases, close to 18% of microfinance borrowers has a relationship with a mainstream lender. And the expectation is that it's going to continue to go up with all the schemes, affordable housing, SFBs coming into play with new products, MSME loans. So it's absolutely critical that there is a single view and a single credit performance report, credit report of consumer. It also is imperative that in terms of usage of the report, when the report gets used primarily from a risk assessment standpoint, one of the challenges in the industry was the credit report was primarily used, to look at the more exposure and multiple lending and the compliance aspect. So gradually, I think the industry is also evolving to look at it from more risk management underwriting standpoint. So the usage is going to happen. And lastly, to Colin's point, I think it's an obligation from us also to make sure that the performance on the microfinance is enabling borrowers to get an individual loan, because the objective is to make all these borrowers to move to mainstream lending, and their performance over the last 5-6 years should help them to move there. And our ability to provide that, which we all provide today. I mean, today, if you want a single unified view, you can get it from the credit bureaus. Our obligation is to provide that to the lenders so that you can include them in your mainstream products.
As Satish said, credit bureaus are in the business of giving insights, not just giving us the data and asking us to figure out what to do. So given that we are in a situation today where the microfinance industry is at a point going through not necessarily a crisis, but a delinquency has around 15-20%. Did any of these insights could have come before the event has happened, that this is what is likely to be happening a couple of months before from any of the credit bureaus in terms of what is the macro data?
Sure, thank you, Bhaskar. So I think a very valid point saying NPAs are rising. How do we contain this NPAs? Is all this data is there? How do we make sense out of that from an analytics perspective? Just to update the group over here, what we also do, so anybody walking to the door, you're trying to lend somebody on a microfinance piece. We don't only look at the microfinance repository, we also look at the consumer repository. We also look at, there are conditions to met in microfinance. You should not be getting lended by more than 2 or 3 players. So all these analytics play, and then at the end of the day, you get the results saying it is a straight pass-through, or there are red alerts. We send it across to the customer saying he has more funding, or his income to debt ratio is very high. Other thing what we do is, in microfinance especially, employees, because they send the files as well, so, and there are a lot of employee churn and turnaround happening as well. We can also build some analytical tool around it, where which employee is putting the file into the system, which has red flags in the past, where we can throw the results as well. So a lot of analytics can be built on top of this.
Ram, over to you. In terms of what more could be done to use the data more effectively, as somebody said, don't you think that the discussion which happens on technology in microfinance looks the same, sounds the same for the last 7 years? So probably the credit bureau discussions don't really sound the same, that we talk about a 360-degree view, we talk about analytics, and we discuss this over and over year on year. What we need to do as an immediate measure for us to really move beyond using credit bureau data only for being compliant. As MFIs, most of us have used the data to make sure that we are not a third lender, the overall indebtedness is not more than 60,000, and as long as it was done, the job was to approve, then really looking at anything more. That would have been pre-November 8th. Post-November 8th, should the position change, and what is that we need to do for that? I would like to hear all your views. Starting with
Definitely. So I think so that's a great point. It's like, see, the main thing is, having an early warning, that we can do, especially when it comes to the MFI, it's not the individual, it's more about the macro, let's say it's like from a geography, a sub-geography, whatever it might be. So those kind of analytics, I know many of the bureaus already do that, and there are actually other overlaying that information on top of that could be other information, for example, that you might be collecting about, be it the utility bills, or actually it's like the, agriculture crop, it's like not actually working at some point. So those kind of actually different information overlaying that and actually providing good analytics. See, in all fairness, it's like, if you say something 3 months before that something's going to actually go bad, it's slightly okay, but it's still, we would like to actually have at least a 6-month prior notice, because see, many times it's not about, no one likes to actually talk to the client about collections. It's all about helping them, saying it's like how we can actually help you, either alter the plan of the loan, alter actually different things. See, at the end of the day, people go through troubles, and every financial institution understands that. On the same side, on the other side, you actually have the regulators who have given guidelines saying it's like, these are the terms on which you have to actually have NPA or provision. So a combination of actually what the bureaus are already doing in terms of actually analytics, putting that up and actually providing, saying it's like based on your portfolio of data that you have, I think so it's like, I'm seeing this. That would be actually something that would be very good to actually have for the institutions.
So I totally agree. I think that's to answer your first question around, what happened. To be honest, from our perspective at least, that we in all likelihood failed, and that we were not able to bring those insights to the community, saying this is going to happen. So, our job is because we have been given the responsibility of being custodians of data to come back to you saying this is going to happen. And that's what we are meant to do, that's what we do in many other segments, and I think we have all not done that in MFI, and we should be doing that. And that's the first piece that's important. The second piece, also connected to 360-degree view, is we cannot present a lot of information, but I think what kind of best in class, and we look at any types of lenders, the same type of lenders in any other type of emerging economies as well, the level of evolution, if you will, of us and you as a community is reusing the same information. So for example, if, Sundar made the point, if you're looking at this data from a compliance standpoint, that's a one-off and you're done with, then he's not getting the full value out of it. There are probably 4 or 5 things that you can and should do. And if you look at people who've been using bureaus for 8, 10, 15 years, that information when somebody walks into a door and when they apply for credit, that information is used for many other decisions outside of just saying yes or no. The yes or no is a much easier decision a lot of times. What's more important is how do you say yes to. That's actually a lot more important for banking, right? It's not about yes or no. I'll give a very different example of telecom. They don't say no. But why do they use our information? They use our information to figure out how much. Now, how much is a lot more material. It's not just a function of how much they are asking for. Same thing in insurance. Every time money is given, the way you get faster and cheaper access to credit for borrowers is to be able to use the information at multiple different levels. I think twofold, our job, and you have to keep us, honest in terms of us providing insights, and we've not done that. Demonetization accelerated stuff that we could have predicted before. But the second thing is saying, we will all provide information which is all a customer-centric across all, borrowings that they've ever had, but use it in 4 or 5 things as you look at underwriting. And that's actually becomes the true measure of using credit information properly.
If I could just add to Satish's point there, I think the question was asked, what can the bureaus do? But I think there's also a very important point, what can you as lenders do? Because if I ask the question, if you look at the US, they had a fantastic credit reporting system, very advanced. And what happened in 2011? Financial crisis. The information was there, but when you look at it, it was ignored, and there were still loans being given out to subprime candidates, etc. So that's half of the equation, what the bureaus can do in providing you with the analytical data, but it has to be used properly in the other way. Now, in terms of the 360-degree view, I guess when you start including other alternative data from other sources, you still have the issues around consent and confidentiality and privacy. So if it's going to be part of the formal sector, it has to fit in within the legal framework, within the legislative framework, so that the consumer is actually giving permission for that data to be blended, to be incorporated in the credit reporting area. And what we are seeing, this is quite an evolving market in even emerging markets, where you have these, call them fintechs. They're providing their own data, they're analysing their own data, but that data is not being shared with the bureaus necessarily, and there's not even a consent. I mean, for instance, how many of us here are on Facebook? Do you realise that some lenders are using that information to make credit decisions? Have you given permission for that data to be used? Most likely you probably don't know. So there are other issues that need to evolve, certainly around privacy and confidentiality.
In the interest of time, quick rapid fire, in terms of from the bureaus, all the 3 large bureaus are there, 3 of the 4. What should be done in the next 6 months to enhance the quality of decision making? That we don't see a shock or a black swan just happening and we realize after that. And from Colin, what as lenders we should be doing in terms of data quality and what more should we capture? And from Ram, in terms of overall, what is the ecosystem that should develop for us to do a better decision making? Start with Satish.
I think we covered the first one. What needs to be done is always expect and want a 360-degree view, which is, let's define that saying a consumer's full profile from a credit standpoint and any other information that they can give consent to, right? So I think, the expectation has to be that we are not your or my grandfather's credit bureau. Credit bureaus have been around for hundreds of years. We have to start looking at not just credit information, but all types of alternate data and present it to you. So those two things, right? Always ask for it, always get a full view, never only look at a siloed view, and expect in the next 6 months to be able to get as much as, the consent is going to be very important, and India is moving towards a consent-based architecture, so I think it will be easier, but ask for more data to be able to use the information. That's kind of from our perspective. Second, from you, the same point that I made earlier, look at the information in terms of making deeper decisions, and also engage with us in saying what else could we do differently. I think those two things are very, very important in the next 6 months. Problems arise in every financial lending institution, but self-awareness, I think, in life as well as in the corporate world is very critical.
So I agree with Satish. Absolutely, look at the holistic view of the consumer. The second most important thing is that look at the existing data a lot more carefully. There are 100 data fields that come into the microfinance credit bureau today. You can look at things like how the EMI of the customer has built up over the last 24 months. You can see, just looking at only the balance and looking at only whether a third lender is, probably not the best way of understanding the customer's capacity. So look at how fast the customer's EMIs is building up. Also look at the macro data. Try to look at, how fast a particular area is growing. Because, Bhaskar, to your point, I'm not so sure whether we could have predicted a black swan event. I don't know. These are event risks, right? I mean, these are things that you have no idea that it's going to hit us. But the point is that we can look at certain trends in terms of bubbles building up, and for that, we are in a position where we can provide a lot more insights on how fast the market is growing. But it's up to the industry also to kind of work with us, because you are end of the day practitioners. You bring in a lot of subject matter expertise into the discussion. So I think working between both of us, we can put together a lot more insights on the data itself.
Thank you. Just to quickly sum it up, every single footprint on lending, you should expect whatever they said was complete overview and a 360-degree view. It doesn't matter whether it resides in an MFI bureau or a consumer bureau or a commercial bureau. At the end of the day, you need to make one decision and you need to get a complete picture over there. On top of that, expect to have bureaus build some intelligence on top of it. And as we talked about saying, we need to do more on trends, analytical trends coming out for the MFI bureau, which we are doing on the other side of the market.
One thing to you as lenders, you've heard from the bureaus that there's limited abilities that they can do as to the quality of the data. The data they get comes from you as lenders. What you can do is take seriously whatever data you submit to make sure that it's accurate, it's up to date, and it's correct. So by you providing the data to them in that form, then you will get a better quality report back. So that's my important message I want to leave with you there.
And actually, Colin's point was my first point. It's like invest today in actually data, in storing this data, because you will actually get the benefit of it 5-10 years from now. It's like a data miss today is actually an opportunity missed. So invest in that. That is my first suggestion. The second thing is educate the people, on what bureau is and what are the implications of that. If you do these two things, I think so as a whole, as an institution, we'd be doing a lot to actually grow this community to actually go to the right place.
Thanks. Time is up for the discussion, but let me say that probably next year when we discuss this, we'll be discussing about how 360-degree view, which we discussed, we have put it in practice and has helped us in terms of better decisioning. It's time to move on from ticking the box as a credit bureau input and decisioning in microfinance to moving to a holistic view of the customer and understanding. I'm sure we look forward to support from Sybil, Equifax, Experience and IMAC in terms of giving us more sharper insights, and we'll do the decisioning. Thank you very much.
Thank you very much, and a round of applause here for all our panelists and of course for our moderator. I would request Mr. Suyog Pradhan, AVP State Initiatives, MFIN, to kindly join us on stage to hand over a memento to all our speakers on the dais, please.